Scott Gecas with Walsh Trading is in Chicago at the edge of the trading floor at the CME Group. Scott, we've really pulled back on a lot of these grains here today. More losses now. We're starting to almost kind of reverse the trend of higher that we had going for us there a few days ago. It's evident in what we've seen happen this morning, you know, with the wheat kind of reversing direction. Well, and for all intents and purposes, soybeans reverse direction also.
Yeah, so there's a lot of different things going on. The soap opera continues with the trade war talks. You have positive rhetoric coming out, then you have negative rhetoric coming out. The Hong Kong protests are definitely throwing a wrench into all the Chinese trade war talks. So we have yet to see, everyone's been talking about a partial deal. We have yet to see anything solid or concrete come out of that. So the traders are definitely watching the headlines moving forward. As far as China saying that they're going to make a big push and buy a bunch of U.S. ags, now they just came out and said, well, the high tariffs are weaning those big buys back a little bit. So that's one of the reasons why you're seeing a big pullback. As far as the beans go, the cumulative inspections are off by 7%. In corn, they're down over 64% versus last year. That's really big. So you have lower pod weights, lower ear weights. Those are all taking effect. The weather's starting to become a bigger factor. So we have a lot of things that are moving these markets left and right. For beans, the calls have a little bit of an upside skew, which means that the traders are pretty much looking to buy dips. Corn, you're seeing a little bit downside pressure and a little bit of skew in the downside puts. So people are willing to pay up for downside puts in corn, willing to pay a little bit more for upside calls in beans. So we have to wait and see how this is really going to play out.
Does that kind of tell the tale of what a lot of these folks are thinking about where this market may be here over the next 2 to 3 months?
Well, when you look at the option flow, that is typically an indication of which way the skew is going to be or which way the risk is going to be. So if traders are willing to pay a little bit for upside calls, that means that the risk is a little bit more to the upside and vice versa for the put. So it just really depends. For years and years and years, the trend was being short beans, long corn. That has completely flipped for over the last 12 months or so. So we have to wait and see if this trend is going to continue or what's going to happen, especially with the headlines.
All right, Scott, thanks for the explanation on that. We'll be back and we'll try to explain this livestock market. That's straight ahead here on the Market Day Report. Let's go to the live cattle market. We've been watching this market just kind of drift around here on both sides of unchanged this morning for some of these contracts. And right now, we've got that front month of October up 20, but the rest of those contracts are all on the lower side. So the next front month, December, which actually has just a little bit more volume to it, down 13, 113.33. February down 30, 119.25, but we're still trading above that 111 in the nearby. The November feeder cattle are down 32 at 145.75. January down a dime at 142.07, and the March is down 8. And now the hog market is all lower all the way across the board after touching limit higher yesterday on the December contract. We're down 163 on the front month, 70.50. February down $1 at 78.15. April down 65 at 84.25. I want to just briefly touch on the cutouts from yesterday afternoon here because we'll watch this demand here just a little bit on both of these proteins. Choice beef yesterday up 80 cents. The selects up 2.15. The pork cutouts from yesterday afternoon, they were mixed because the carcass is up 12, the loins were down 2.97, the hams were up 3.85, and the bellies were down $1.96. Scott, what's the volume like there today on the edge of the trading floor?
It's pretty light. There's really not too much going on. Traders are watching headlines. Brexit is definitely a factor in everything that's being moving around. You know, the Brexit thing is they're running out of time. Whether or not they're going to get that deal done, who knows? But everyone's watching the headlines for that. You know, as far as the cattle market goes, everyone's just watching the cash. The cash trade has been strong. As you can see, with the cutouts being stronger, it's a little bit of trend in the cash is up as well as the futures are up. We expect that to continue unless if something changes, and then we can get a pullback. I mean, cash traded close to 110, a little bit under, so that's very supportive. As far as the hogs go, I mean, the fundamentals are just rampant, just pointing straight up. And what I mean by that is we're having record imports with the high tariffs to China. Chinese pork prices are up 166% versus last year. So what that means and what traders are watching for that particular with the Chinese prices is as the futures climb, we expect more imports to pick up. So if we're already at record imports, if the Chinese pork prices continue to climb, we expect that import campaign to come fairly soon. So you're seeing a little bit of an upside skew in the calls across the board. The skew range is anywhere from 25 cents all the way up to $1 in the deferreds. So that just shows that traders are expecting that import campaign to show up somewhat soon.
Okay, Scott. Well, it goes back to what you were saying, too, watching the headlines from China to see whether or not they're going to jump in here and buy or they're going to back away from a phase one trade deal. Thank you very much. Sure appreciate it. Scott Gecas, there at the edge of the trading floor in Chicago with Wall Street Trading.
All right. As always, thank you guys very much.